What's up guys, Alvaro here, welcome to the Bilingual Stock Market channel again. You guys already know this channel. In this channel we talk about the markets, but we do things a bit different because we talk about the markets in English and Spanish, so you guys can pick your preferred language. And in this video, I want to analyze 3 very oversold stocks in which both ARK Invest and Cathy are investing at a long term. So I want to take a look at the financial situation of these 3 companies, and I also want to break them down from a technical standpoint for those who might be interested in taking a short-term trade. So without further ado, let's get started. And the first stock of this video is going to be none other than Zoom Video Communications. So what's the bull case that Cathy Wood is making in regard to Zoom? Well, she argues that the way that we act and interact as human beings changed forever ever since COVID-19 came around. And most importantly, she says that companies have started to realize that having their employees working from home or working partially from home reduces a lot of costs. So if Cathy Wood happens to be right, and this is my personal opinion, if Zoom can prove over time, let's say 2 or 3 years out, that they can keep on growing up their revenue on a constant basis, I think that this stock has a fair chance of going on a tear. We can also make the case that there are a lot of competitors out there to Zoom, like Microsoft Teams, like WhatsApp, like Facebook. But think about this, guys. The narrative that is surrounding Zoom as of now is very positive for Zoom. And why? Zoom has turned into a verb. People are using Zoom as a verb. Hey, Alvaro, let's Zoom later on today. Let's have a Zoom meeting. Let's Zoom tomorrow. So there is a very positive narrative in regard to Zoom, and I think, and obviously this is my personal opinion, that Zoom as of now, okay, and from where I sit, is the undisputable leader in this business. So let's see what happens over time in the case of Zoom. When it comes to the financial situation of Zoom, we have one red flag, but we have a bunch of positive aspects, guys. So Zoom is a debt-free company. This company doesn't have any debt in their balance sheet. That is very, but very positive. And on top of that, this company is sitting on $2.2 billion in cash and cash equivalents. So this is, and remember guys, this is not a car company. This is not a company that is making cars. This is not a logistic company. We're talking about a tech company that has 0 debt and on top of that has $2.2 billion in cash. That is very, but very interesting. The revenue of Zoom, unbelievable growth in terms of revenue, guys. So revenue for this company in 2018 was $150 million. In 2019, $330 million, and last year, revenue for Zoom was $2.65 billion. That is unbelievable. So Zoom is the perfect example of what a growth stock should be doing as of now, growing a lot. However, on the flip side, a red flag, the valuation of Zoom. Even though Zoom is trading as of now way off its highs, Zoom is trading at 125 earnings. So the PE ratio of Zoom is 125. So you guys can go ahead and do the math. The market capitalization of Zoom as of now is $94 billion. That's the market cap of Zoom. Whereas this company, or the revenue that Zoom made last year was $2.6 billion. That implies that a lot of good news has already been priced into the future, even though Zoom is trading way off its highs as of now. And I ask you guys, what do you think about this company? Do you think that Cathy Wood is right? Is Zoom going to be a monster company 4 or 5 years out that is going to be printing billions and billions of dollars? Please drop a comment down below and let me know. And for those who are interested in or that might be interested in taking a short-term trade, Zoom went up on Friday 6.11% and it closed last Friday's trading session at $307.89. And take a look at this, guys. From all-time high down to $270, which was the price that the bulls of Zoom found support at 3 days ago, this stock had pulled back almost 55%. So if you believe that Cathy Woods is right, and Zoom is going to come back and is going to become a huge and great company, and if you happen to see Zoom paying a visit once again to $270, then I think that you could pull the trigger at that price, right? And remember that I am not a financial advisor, so you have to do your own research work. Okay, from a trending standpoint, guys, what I am thinking about Zoom in the short term, I'm thinking, guys, that if Zoom can burst above the 180 SMA on the 4-hour chart at $320, it could potentially fill the gap up to the next important level of resistance at $360. $360 is an important former area of support and resistance for the bulls of Zoom. So $360 already acted as a support for Zoom in 1, 2, 3, and 4 opportunities before, but it also acted as a resistance back in early January. So let's say that we buy shares of Zoom at $322, $323 once Zoom have burst above the 180 SMA, and we sell those shares at $360, we are looking at a 10% profit. A very solid and nice profit, taking into account that we are talking about maybe a day trade or a swing trade worst case scenario. So watch out for Zoom bursting above this 180 SMA at around $320, or if you want to start a long-term position, and as I said before, if you're bullish on Zoom, if you believe that Cathy Woods is right, watch out for Zoom paying another visit to $270 per share. And now let's go ahead and take a look at the second stock of this video, good old Teledoc. And in the case of Teledoc, the bull case that Cathy Woods is making is kind of interesting, guys. She states, and you guys know Teledoc, this is a company that pretty much engages in the provision of healthcare services via mobile devices such as tablets, laptops, and cell phones. So she says that even when the world gets back to normal, people will prefer having their medical consultations using mobile devices over going to see their doctors person to person. Is she going to be right about this one? I don't know. But I was thinking to myself the other day, guys, when Amazon first announced that they were going to sell all kind of stuff online, most people made fun of them. Most Wall Street geniuses said that they were crazy, that people were always prefer buying at a shopping mall over buying online. And here we are, guys. Amazon is the second largest company of the world in terms of market capitalization. So what is going to happen in the future with Teledoc, or what could potentially happen in the future with Teledoc? Time will tell. When it comes to the financial situation of Teledoc, guys, this is a very tough one. And why? Well, because Teledoc is not a profitable company yet. And what I found most concerning about Teledoc's financial situation is that the money that this company is burning has been increasing in a massive way over the last 4 years. So check this out. The negative operating income for Teledoc in 2019 was $80 million. And the negative operating income for Teledoc last year was $515 million. And hold in there, guys. The cash and cash equivalent position of Teledoc as of now is $722 million, whereas the long-term debt of this company is $1.3 billion. This implies that the long-term debt of Teledoc is twice the size of their cash and cash equivalent position. Red flag, and again, red flag from a financial standpoint. The only positive aspect about Teledoc's financial situation is that they have been able to grow up their revenue in a massive way during the last 4 years. So revenue for Teledoc back in 2017 was $233 million. In 2018, it was $417 million. In 2019, $533 million. And last year, it was amazing, guys. Revenue for Teledoc last year was $1 billion. So they were able to grow up the revenue from 2019 to 2020 100%. That's really, but really impressive. But, we have a bunch of red flags from a cash and cash equivalents position, long-term debt, not to mention the operating income. When it comes to taking a trade, when it comes to the technicals, Teledoc went up on Friday 5.25% and it closed last Friday's trading session at $139.68. And as I said in the case of Zoom, guys, take a look at this. From all-time high down to $130, which was the price in which the bulls of Teledoc found support at 3 days ago, this stock had dropped almost 60%. So if you happen to agree with Cathy Woods, if you did your research work, first of all, and you believe that Teledoc is going to be the next big thing when it comes to healthcare, and if Teledoc happens to pay another visit to $130, then this is a very compelling price in order to start a long-term position on Teledoc. So from a trading standpoint, I'm thinking, guys, that if Teledoc happens to consolidate somewhere between $135 and $140, that could be a very nice spot to pick up some shares of Teledoc. If so, from let's say $138 up to the next important area of resistance that the bulls of Teledoc are going to have to deal with at around $180, we are looking at a 20% profit trade. And why $180? Well, $180 is a very important previous area of support for Teledoc that already acted as such in 1, 2, 3, 4, 5, 6, 7, 8, and 9 times before. So we can assume from a technical standpoint that whenever Teledoc reverses this horrible downtrend and pulls up, it is very likely to find a very important area of resistance at a price that acted before as a very important level of support at around $180. And the last stock of this video, NVTA. And in the case of NVTA, I remember, guys, that I saw an interview of Cathy Woods like 2 months ago on CNBC. She came on the air 2 months ago or 2 months and a half ago or so. And she was asked about what's the company that she is bullish the most as of now out of all of the companies that ARK Invest is investing in right now, including Tesla, by the way, and she said NVTA. So this is a company that has a fair chance of starting a revolution in the medical field, in the healthcare field. And why? Well, because this company manufactures panels that can detect hereditary conditions in their early stages. So NVTA wants to modify the human genome so all sorts of diseases can be prevented before they even manifest themselves. If NVTA happens to be able to do this, I think that the upside potential of this company is huge, huge. When it comes to the financials of NVTA, keep in mind, guys, that this is not a profitable company yet. This company is losing a lot of money, actually. So the negative operating income for NVTA in 2019 was $216 million, and the negative operating income of this company last year was $331 million. NVTA, as of now, has $194 million in cash and cash equivalents, and they have a long-term debt of $453 million. So we have another company over here that has way more debt than cash available. On the flip side, and as a positive sign for NVTA, this company has been able to grow their revenue on a constant basis over the last 3 years. So revenue for NVTA in 2018 was $147 million, in 2019 $216 million, and $279 million in 2020. And for those who might be interested in taking a short-term trade on NVTA, this stock went up last Friday 6.32%, and it closed last Friday's trading session at $27.74. And as you guys can see, we find a chart that looks extremely alike to the ones of Teledoc and Zoom that we just broke down. So we can make the case that most of the stocks that ARK Invest is investing in are pretty much mirroring each other, it looks like, right? Okay, from top to bottom, from all-time high at $62 down to $25, that was the price that the bulls of NVTA found support at 3 days ago, we had a 60% drop or a 60% discount from a long-term perspective. So if any of you is bullish on NVTA and this stock happens to pay a visit once again to $25, that might be a very interesting spot to pick up some shares of this company for the long term. From a trading standpoint, guys, I need to see NVTA bursting above $32 in order to start a trade with this stock. $32 is a very important level of support that already acted as such in 1, 2, 3, and 4 opportunities before. So let's say that we pick up some shares of NVTA bursting above $32. Let's say that we pick up 100 or 200 shares of NVTA at $33 and we ride them up to the next important level of resistance for NVTA after having burst above $32 at $40. We are looking at an 18% profit trade, nothing to complain about. And I'm thinking that $40 is going to be a very tough spot for the bulls of NVTA because this is a price, this is an area that already acted as a resistance for this stock in 1, 2, and 3 opportunities before. So watch out for NVTA, guys. Next week, either paying a visit once again to $25, which seems to be a very attractive price to pick up some shares of this company for the long term, or maybe bursting above $32 and filling the gap up to $40 per share. And with NVTA, I am going to wrap up the video. Thank you very much for your attention and thank you very much for hanging out with me once again. If you found value in this video, please hit that like button for me and consider subscribing to the channel. Remember that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays right after the market closes. In those videos, I break down from a technical standpoint both the S&P 500 and the Nasdaq 100, but I also break down 3 stocks that are going to be on the top of my watch list for the next trading session. So if you want to have access, if you want to get rather the notifications of those videos in a timely manner, you'd better be subscribed to the channel and you also need to activate the notification bell right up there. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, the YouTube channel in which we talk about the wonderful world of Wall Street, but we do it in English and Spanish so you guys can pick your preferred language. My name is Alvaro and I will see you guys tomorrow, Monday, right after the market closes. Peace out.